In this video, we will be going through financial literacy. You might be wondering, how is financial literacy related to education and career guidance? Well, many students that I have met over the years have expressed that having a high salary is very important to them, and they are very focused on industries that they feel earn a lot of money instead of job that appeals to them based on their interests and strengths. So, having financial literacy skills can help you pursue your passion with an assured peace of mind, no matter what job or what income level you are earning. So, it is a very essential life skill to have. To see whether you require financial literacy skills, test yourself using the questions on this screen. Which sentence do you agree with? Is it A? You feel that having credit cards are not a good thing. That's what we learn from young. And we need to have as much insurance coverage as possible and buy it as early as possible. Somehow there is this concept floating around. Or two, you agree that the only way to live comfortably is to have a high income and maybe have some savings. Perhaps you agree with both sentences. Well, we will go through the rest of the slides and you will see whether are you right or wrong if you agree with one or both of the sentences. To start things off, imagine you are stranded on a deserted tropical island. Look carefully at the images. If you can only pick two items, which two would you choose? Is it a tugboat or lifeboat, B, a fishing rod, C, a thermal jacket, D, a box of matches, E, a cooking pot, F, a water filter, G and X, or is it H, a tent? You can only pick two items, and the image on the screen is very important. Look for clues. What two items would you need for survival until help arrives? If you need more time, you can pause this video while you think. I'll go on to the next slide. Okay, so what are we going to cover? Firstly, you will find out that having financial literacy skills is not just for those working in banking, industry, or in business. Then the only way to cope with cost of living is not just having high income, and you also do not have to live very miserably, be very thrifty in order to tolerate or save up for rainy days. The main concepts that we will be going through first, have you heard of the term dollar dribbling? Why do you need budget tracking? Second, how can you optimize your emergency savings through using the right type of savings account? Did you know that there are actually different types of saving account? Well, I didn't know when I was a kid until I was in my early teenage or early adulthood actually. So these are things that I wish someone had taught me when I was younger. Three, how can you maximize your salary through smart shopping, stretching your dollar? D, credit cards. There's also actually more than one type. How can you use them in a smart manner as well? Five, understanding the different types of insurance coverage that are suitable for you based on your life circumstances. And six, we'll briefly cover types of passive income. Okay, I've categorized them into three main categories. Okay, first one for budgeting, you can scan the QR code for a formulated Excel sheet that you can use. This was provided generously by someone online, and I have actually customized it that are more suitable for use with students. There are different tabs. If you find the adult tab to be very complicated, you can look at it when you are much older. Now you just use the one for students, and you can also change the fields and columns if you still feel that there are too many things or not enough things you want to add in more, you can do so. So why do we need to monitor our expenses and track our spending? You might find it very tedious, or actually it's quite common sense. Why do I need to keep track of it? Sometimes when we do things too automatically, it can become a bit mindless. And let's say you feel tired every day from school, you want to take a cab instead of taking public transport. Slowly, slowly, your money, your parents' money will be used up very fast. All of us have finite resources. So if you spend more now, it will lead to having less for the future. Again, it's not telling you to live very miserably, but if you have different options and alternatives, should you always go for the most expensive one or the cheapest one? It will depend on your own tracking. So things will not be very obvious or apparent until you start to see the pattern from day to day. Let me introduce one concept of value-based spending. So what does this value-based spending mean? Okay, imagine your family or yourself, you have managed to ballot for a BTO flat. BTO stands for built to order, which are like randomized given to people when you submit your interest. So doesn't mean first come first serve. It really depends on this generated system where they will pick out applicants and then allocate it to them. And in Singapore, because of limited space, land constraints, and the government wants to prevent speculative buying in properties, they have imposed this MOP, which stands for minimum occupation period, where after you ballot for this flat that's so hard to come by, you need to stay at least 5 or 10 years. 10 years is for prime locations before you can sell them away. So let's say you ballot for this very nice unit apartment with a beautiful view. What would you do after the 5 or 10 years? Would you keep it because it's very lucky for you to get this unit? Not everyone who wants it can get it since it's public housing. And you have already spent a lot of time and effort renovating. Renovation can be quite a hassle. If your family has gone through renovations before, you might have experienced it. Two, but because your flat is so hard to get and so unique, if you sell it off in the market, resale market, you will definitely fetch a good price. So which one would you or your family choose? It depends on your family's values, what is important to you, and how do you want to live your life. So let's say if you sell this flat, you earn 10,000 profits. Okay, this number is actually very conservative. The figure is actually 10 times more, but I scared the number is too big for you to comprehend now. So let's just imagine you have a 10,000 profit from selling the flat. Will you then use this extra money to buy an even better house, perhaps in a better location? Or would you actually buy a cheaper place so that you have more money to spend it on something else? Usually in the workshop, I will get students to key in their answer, and you can see that there's always like 50-50. Some people want to buy a better place, some people want to use the extra money to spend on something else. Because why? All of us value different things in life. Some people, they value living in a nice place, having a very comfortable home. But other people, maybe they value having a nice car or spending on food. So as I mentioned earlier, our resources are finite. You have to prioritize what's important to you and allocate your resources based on what is important to you, not to other people. So let's say you buy a better house. Yes, it might be more convenient, but the cash you have on hand would be lesser. If you buy a cheaper house, there's no nice view, but you have more money to spend on other things. So what you value in life will determine the direction that you are headed. Yeah, so that is the concept of value-based spending and why you need to monitor your expenses. So another way to help you maximize your rainy day funds and salary, we'll go through the different types of savings account and smart shopping. Okay, in case you're not familiar with finance lingo, in the next few slides, I'll be using this quite a bit, so I'll explain what it is. Interest rates can mean two very different things. One, it is the reward for saving your money. So for example, if you put your savings in a bank, they will pay you an amount that is called interest rate. It can also mean the cost of borrowing money, which are usually used when you apply for credit cards and use it, or you apply for loans, again from the bank. So interest rates are usually expressed as a percentage of the total amount, and it can be affected by how well the economy is doing. And nowadays, you see a lot of geopolitics. They are affecting investments, inflation, and interest rates as well. Okay, so when you hear the word savings, what comes to your mind? Is it putting aside money in your piggy bank or coin box at home? Or when you think of savings, it is parking somewhere in some bank and not having to think about it? So if your answer is either of them or both of them, the first one, if you put your savings at home, right, it's just going to collect dust, to be very honest. If you park it in a bank, you might earn some interest rates, but the interest rates given by bank is very, very low. I will explain it in the next slides. So if you don't think too much about it, it will start to become idle funds. Then you might as well just park it, put it at home, where if you need money, you can just access it anytime. If you put it in a bank, you still need to go and find an ATM and withdraw money, more troublesome. So both of these are not very good, but both of these are what I practiced when I was a young kid. And then I realized to my horror in the last few years that I shouldn't have done that. So what should we do then with our savings? Okay, so just briefly explain how do banks work. You put your money, your savings with them. They will pay you very, very low, maybe about 0.05% per month. So maybe if you park in $100 this month, next month they only give you 5 cents for parking it with them. That's the interest rate they pay you. So this is a regular savings account. They pay you because the money that you park it with them, they can use it to maybe lend to other people or for their own investments. If they lend to other people, they are going to charge the borrower 2% a month for borrowing this money from them. So that's how bank earn money. They are profit-driven institution. Okay, then what should you do if you don't just use the savings account, which you don't have to think too much about? Do you know there are other types of savings account? So the second or most common type is called high yield savings account. High yield savings means you get a higher interest rates for parking your money with them, but you cannot just don't think about it. You need to do something. They won't give you money for free. Banks are not charities. So what do you have to do? For example, let's say you just started work. If you credit your salary with them every month, so let's say you choose bank A instead of bank B, to reward you for choosing them every month, that means every month, that means they get your loyalty, they will pay you slightly higher interest rate. Maybe instead of 0.05, they give you 0.1, for example. Then if you do even more things, maybe you buy a house and then you apply for a mortgage loan with also this bank, then they will give you maybe 0.15 per month. For some people, you apply credit card with them and you spend a minimum number per month. Again, they will pay you even higher interest rates. Yeah, so this is what they call by high yield savings. Then the third one, also very common, is called fixed deposits. Fixed deposit Some people treat it as a savings account, some people treat it as a form of investment. Fixed deposits, usually the interest rates they pay you is also slightly better than the regular bank account. For last year, 2 or 3 years ago, it went up to as high as 3%. But after our current US president took office, it has dropped to as good as your regular savings account, only slightly better. Then why is it called fixed deposit? You see the screen, there is a lock. That means you have to park your money with them and not touch it for maybe 3 months to 1 year, depending on which option you choose. Sometimes the longer you park it doesn't mean the better they pay you. So you have to look at the options provided. And you park it with them, that means you cannot withdraw money for that 3 to 12 months. There's inconvenience on your part. That's why they pay you slightly higher. Not like your regular savings bank account, you can withdraw anytime you want. So if you are thinking of applying for fixed deposit, you have to plan. That's where your budgeting sheet comes to help you. Would you need this money for the next few months? Is there any upcoming big event that you are going to have and you might need the money? Then you cannot park so much or you cannot use the fixed deposit. So these are the three most common type of savings account. And doesn't mean high yield savings is the same across bank A, bank B, bank C. Different banks, they have different criteria. You have to choose the one that most suit your lifestyle. Let's say now you are a student, you don't really have a salary yet. Then maybe you cannot choose bank A because bank A need you to credit salary with them. Yeah, so you have to do a bit of research on this. Okay, next we are going to talk about smart shopping. So please do not see smart shopping as something being very auntie-like. A lot of students that I know with financial literacy skills, they practice smart shopping, and I'm quite impressed by it. It doesn't just mean girls. There are actually quite a lot of guys doing it as well. So how does it work is when you spend a certain amount through smart shopping, maybe a loyalty app, etc. You can accumulate points for this particular retail or F&B outlet. Then you can use the points to pay for your next purchase. So instead of withdrawing cash from your own finite pool of resources, they are kind of rewarding you for spending with them and again being loyal to them. Yeah, so what are some of the smart shopping you can tap on? Is the use of coupons, membership, or loyalty points. For example, when I ask students what is smart shopping, a lot of them tell me they have McDonald's, the Mac Rewards. Yes, that is one good example. And Burger King also has the coupons, which some students know because Burger King will send out these flyers to their home. Do you know that you can also find these coupons on their website? There's soft copy version available that you can download. So doesn't mean you have to wait for the flyer to come to your house, then you can use it. They actually have it ongoing throughout the year. Then if you know that you tend to like a certain drink, you always go there to buy, you can also download their apps and pay and accumulate points. Most of these are free membership. You don't have to pay for any annual fee. You just need to key in your handphone number. Then, for example, Mr. Coconut, they will reward you a drink when you spend certain amount after a few months. Yeah, so this seem like the cards that last time some shops they will give, then you get a stamp and you have enough stamp, then you pay. But a lot of times those cards, they run out very fast. The expiry is quite soon, and then you have an extra thing to keep which you may lose it. Nowadays apps are more convenient, and many of these retail and F&B on your birthday month every year, they will also give you something free. Yeah, so all these are you don't just blindly spend and spend and spend at the same shop, and then you miss out on all these rewards that you could have right on them. If your family travels often, you all also might have heard of frequent flyer miles like KrisFlyer. Every airline will have some flyer mile partnership. So you can also since you already spend so much on this airfare, right, might as well accumulate loyalty points to spend it on your next flight. Or even they will pay for anything that's travel related, accommodation, attractions. Then when you go NTUC or the supermarkets to buy things, if you purchase the healthier choice option with the triangle, they will also give a QR code at the end of your receipt. And also don't throw all this receipt away. You can use the Healthy 365 app, scan the QR code and again accumulate points to exchange for another NTUC voucher or pay for your EasyLink card, for example. Yeah, so again, all these things, if no one tell us, right, like no one told me last time, I all learn it through friends, through work colleagues, and I realized how stupid, in the sense that I was for many years by missing out on all this because I didn't pay attention to them. Okay, then besides smart shopping, I think when I was young, I was told that credit cards are not a good thing. Try not to apply for credit cards because you can get into debt very easily. When I grew up, I realized that that is not very true. It really depends on our own self-discipline. And again, monitoring your expenses will help. Okay, so what's the difference between credit card or debit card? Most of us as students, we would have debit cards. That means you use this card, go to the ATM, you withdraw money. Usually, they won't charge you for any fee because your money is already in the bank. But the bad thing about debit card is, let's say you buy something online, then the merchant happen to be a scammer, and you use your debit card to pay them because this transaction is from a ready pool of money. The transaction is almost immediate, and by the time you discover it and want to stop it, it's very hard to stop. The money will have gone through already. For credit card, usually if you pay for overseas transaction, there will be an extra charge, maybe a few percent of your payment made, and you might have a option to spend now, pay later, which means that usually credit card is not taken from this ready pool of money you have in the bank. You don't even need a savings account with the bank to apply for credit cards because the concept of credit card is you kind of borrowing from the bank to pay for your purchases. Then at the end of the month, when you receive the credit card bill, then you pay for it. Why I say it's an option, because I use credit card like a debit card. So before the bill come to me, right, every month at the start of the month, I deposit, let's say 500 a month into this credit card first. So that by the time the end of the month arrive, this money already paid to the card will help me deduct automatically. I don't have to go and monitor, how much did I spend this month? Have I paid the bill before the deadline, which is quite stressful. So I just need to remember not to spend more than 500 that month. And if I did, quickly go and top up the card before the bill comes. As long as you pay before their deadline, there's no cost, no extra cost to your payments. But once you miss out by one day only, wow, the interest can be very high. So let's say you spend $100 on something, you forget to pay the $100, the next day you might have to pay 150, for your one day late payment. The good thing about credit card is the transaction is not immediate because the payment made is not from a ready pool of money. So usually it will take maybe a few hours to a few days before they process that payment. In case you realize the merchant is a scammer, you still can quickly call the bank to stop this transaction. So that is one good thing about credit cards. Another thing about credit card is because you are kind of spending as a loan, the banks want to attract more people applying credit cards with them. They do this through rewarding you for your spending, something like your the smart shopping earlier. So credit card, there are three main different kinds. You can opt for the cashback card. As the name suggests, for every payment you make, the bank will give you a little bit of incentive back. So maybe you spend $100, they give you $1 or $2 back at the end of every month. Then the rewards card, instead of monetary incentive, you can maybe, let's say you go to a retail or F&B, you get a discount for your purchases because the banks partner with those merchants. Then a very common card is also the miles card, similar to your frequent flyer smart shopping app. Miles card will accumulate points for every purchase, then you can use it to spend on travel related expenses. Okay, why I include credit card into this is because as much as it has its own merits, uh, again, if you don't know how to, or you are not disciplined enough to keep track of your expenses, uh, recently Singapore published a few articles on how high the credit card debt has gotten in the last, compared to the last 10 years. So please remember that owning a credit card is a responsibility. Yeah, you cannot just use it without thinking about it. Again, mindlessly spending, then you will get into a lot of trouble. And sometimes there are hidden costs that might not be upfront. So, but they are always in the small fonts, terms and conditions. Yeah, so a lot of people they get attracted by all these rewards that they receive from credit cards. They forget that there is an annual fee to owning a credit card because the bank give you so many incentives, right? They will also charge you for it. So what are some of these hidden costs? Things like owning the card, you have to pay an annual fee, usually a few $100s. You have to be proactive to call the bank for a waiver of this annual fee, especially if you use the card a lot. You have utilized it, given the bank enough business, usually they will help you to waive off unless it is a very prestigious card. Sometimes they will put a term and condition that the annual fee cannot be waived. Yeah, but most cards, like normal consumer spending kind of cards, you can call the bank to waive it off. Then, as I mentioned earlier, if you forget to make the payment, there can be high interest rates that you have to repay the bank. Yeah, so take note of this when you want to apply for credit card. Okay, so this is just a recap. What are some of the things that you can start doing? If you want, you can pause the video and think about it. Okay, next we are going to talk about insurance schemes. Why is insurance part of financial literacy? You will find out very soon. Okay, when I was young, my mom bought an endowment plan for me, which I totally forgot about until recently when the term has ended and I withdrew the policy and I realized that actually the endowment plan wasn't a very good investment in that sense. Yeah, so I will explain why later. Okay, so the more common insurance are things like travel insurance. They pay for you in case you have flight delay or baggage loss. Then more property insurance, usually the one by HDB. About 77% of Singaporeans stay in HDB. Yeah? So please take note that the fire insurance that we have to pay to HDB every year, maybe about I think $5 or $10 below $10. It doesn't cover things like what is inside your apartment. A lot of people they don't know. They thought fire insurance as long as there's fire cover everything. No, you pay so little. What they cover is just the structural damages to your house. Maybe the walls damaged by fire, the electrical and all that. But your belongings, your furniture, all that is not covered under this insurance. So if you want to, let's say you have a lot of expensive luxury bags and shoes at home, you better purchase a separate insurance that will cover your belongings as well. So go home, go and ask your parents to check, hey, do we have this insurance? If your parents say, I don't need lah, our house got nothing very expensive, just cover the bare minimum can. Okay, then at least they know that there is such a thing. If not, last time I used to work in a community development council where many residents, right, they end up losing a lot of money from fire damages to their homes because they didn't realize that their belongings all that are not covered. So it is quite wasted in that sense. Then a third one is if your family has a vehicle, there are also vehicle insurances. For vehicle insurances, it's slightly more complicated. You have different tiers of coverage. I will briefly explain in the next module because this is just a basic module. I don't want to overwhelm you with too much information. Okay, the lingo that we are going to use for the next few slides is something called premiums. So what are premiums? They are the payment you make to insurance company to keep your insurance policy active. So usually it's every month or every year you have to pay a certain amount. Uh, even if you and your friend apply for insurance, same type of insurance at the same company, and both of you are same age, the premium that you have to pay might differ because it depends on things like uh, age, health, family circumstances. Okay, the just now the three common insurance, we don't have to talk too much about it because not all of us travel every single day, or all of us have to pay for a mortgage. Maybe your parents have, but for house you don't have to worry about it now. Vehicle also not all family have. What we do have is our health, our life and our health. So I will spend more time talking about the different types of health insurance schemes and do you need to have so many. Okay, first one, most common is hospitalization insurance. So hospitalization means in case you need to stay warded in the hospital for a few hours or a few days, the insurance will help you to pay. Usually hospitalization fees can be quite high, but Singapore, thanks to CPF, MediShield, Medicare, all that, they cover some of it, but might not be enough. Depends on what is your condition. So let's say food poisoning. Food poisoning sometimes can be quite serious, or stomach flu, gastric. You might also need to stay. You might even need to have surgery. That's where most people will have this plan because doesn't just mean accident then you need hospitalization, or you have cancer then you need hospitalization. Every single thing also need. So good to have. Second one, also quite common, is personal accident plan. We will never know when accidents happen. Sometimes you might fall down at the car park, which happened to me quite a few times. Uh, then you are injured, you can claim from this personal accident. But does everyone need it? It depends. If you are someone who's very clumsy, you always knock into things, you always trip and fall down, maybe you need, good to have. Or maybe if you are in a sports, contact sports, CCA, sometimes the personal accident, their coverage, right, they might exclude certain types of sports. Most of them will exclude extreme sports like skiing, snowboarding, because those you are more prone to injury. And insurance companies like banks, they are not stupid, they are profit driven. They're not going to pay you money when they know that have a high chance of getting injured. So again, if you want to be covered for those sports, you might need to pay more higher premium compared to the normal sports. So what are contact sports? Things like maybe basketball, soccer, you can get injured, rugby, those are very high contact sports. Or if you are riding motorcycles, chances of motorcycle being injured, no matter is it your own fault or other people's fault, is much higher than people who drive in covered vehicles. Yeah, so again, if you ride motorcycle, most likely the personal accident plan, the premium will be higher. If you don't pay higher, then they won't cover you if your accident is because of motorcycling. The third one, again, is common, but does everyone need it? It depends. Disability insurance, usually if let's say we get injured from certain maybe sports, or get injured from motorcycle, then it loses our ability to walk around, to move around, or daily living, then the disability plan will cover. Yeah, so again, you have to see whether is it really needed, because you have to pay the premium every month. Will and it is beneficial for those who have already started work, because when you work you have a salary, and this insurance will kind of help you cover your family's expenses in place of salary. Because in case we have disability, we cannot work, then we cannot earn salary, the insurance will cover some of that. The third one, critical illness. So what is critical illness? It's not high blood pressure, diabetes, or high cholesterol. Those are not considered critical. Those are chronic illnesses, but not critical. Critical are life-threatening situations. For example, cancer, maybe kidney failure, kidney dialysis. Those are critical. What they mean by life-threatening. So this is good to have if you have family history. Next time you go to your family gathering, talk to your uncle, aunties, go and find a bit more. Do all or a lot of them seem to have this same condition? Then usually at what age does this condition happen? So if they are condition, a lot of them have the same condition maybe from 40-year-old onwards. Then maybe you don't buy this plan now, because you buy now, then you have to pay so many years until it happens. It kind of waste your money all these years. So take note that insurance coverage won't cover you after you are diagnosed. Again, the companies are not stupid. They won't pay you after you already know you have the condition. So you have to buy the plan before you get or you are aware of that medical condition. Then the insurance company will pay for you. So don't buy too early and don't buy too late. You have to time your insurance. Then the last one, life insurance, means in event of us not being around anymore, the insurance company will pay for this loss to your family. So again, does everyone need it? Maybe now you are young, your parents might buy it for you. But let's say you already pay for so many years and then you live until 97 years old. Most of your family members are gone. If you didn't get married, no children, then what's the point of continue paying for this? Because when you're not around anymore, the insurance company pay out the money. Give to who? Give to charity, give to cat welfare society. Yeah, so don't just blindly pay for it, don't and not stop it when you have no more dependents around to benefit from the insurance payout. So all these policies you have to gauge when is it most necessary. So just a recap, for mortality purposes, these three are the most important and good to have if your family has history or you have already earning a stable income. Then for mobility purposes, these three would be more useful and depend on, again, your life situation, your work location, study location. Are there a lot of exposure to certain things which might affect your health and or your life? Okay, so this one is a short quiz. You can test yourself by pausing the video. Okay, the last chapter is on passive income, which a lot of students are most interested about, but I will not go through in depth because again, this is basic module. So if you are interested, I will come up with a module 2 a few months from now, which is the intermediate level. Okay, for passive income, right, this word is actually a misnomer. I think it is quite contradicting. Passive is not so passive. You actually have to do something to earn this income. It's only passive because this is not your main job or your full-time job, what some people call side hustles. So things like rental income, if you buy a property and you have extra rooms, you rent out to tenants, or maybe you buy a condo, you buy two condos, then you rent out one condo, the whole condo to expats, for example. Then it can also mean intellectual property. Maybe you have written a song, you sell it to record companies, they play your music, they will pay you royalties. Or you write a book, you publish it, then you also get paid for it. You can also create an invention, then you apply for patent, then you have patent rights. People will pay you if they want to recreate your invention. Then it can also be in the form of investments. So different countries might have different names for passive income. The one that you see on the screen, they more or less mean what I have just explained. Then for investments, there are also different types. First one, term deposits are something like the fixed deposits that I shared earlier. It, it can be called fixed deposit or structural deposits. Then that one is when you park your money with the bank. If you lend your money to the government, did you know that you can lend money to government? They are called bills and bonds. So uh, they the term for it is government securities. That means you lend your money to them, then the government pay you certain amount of money, again the interest rates. Investments can also come in the form of commodities like oil and gold. Gold prices have been quite good for a few years. Or real estate, like you buy two property, then you get rental, or maybe you sell your property, buy and sell quite often. It can also be a form of investment. Or you buy stocks and shares on of listed companies. Okay, so yeah. So all investments carry risk. This is something that you need to know. What do we mean by risk? Risk means that they fluctuate. How much you earn for each of them varies by geopolitics, by how well the economy is doing. So government securities are sort of least risky because government cannot run away. You lend your money to them, they will still be there. Yeah, so why we put it as less risky, but because it is so less risky, right? It's very popular and doesn't mean you want to lend money to them, you can do it easily. The government will make it like a ballot. Again, it's like a balloting system. Every month they will release certain bills or bonds, then people have to go and apply for it. Then through a randomized generated system, you can see whether you can lend your money to them for a few months or not. For term deposits, banks are financial institutions. So even though most of them last quite long, there is a risk that they might just collapse and close shop anytime. So when that happens, that really depends on the economy. I give you an example, a real life experience that I went through. Right before COVID, I didn't even hear about COVID news. I went to apply for a 6-year structured deposit with a particular bank. 6 years. So when I was signing the contract, the financial advisor was telling me, if I withdraw early before the 6 year is up, I will have to pay a penalty. I said, okay. Then on their side, he said if the bank closed down, which will never happen, they will just return all my money. They won't pay me extra, but they will pay me all the interest that I've earned and so on. Then just 1 month later, suddenly I received an SMS to tell me your 6 months structured, 6 year structured deposit has been cancelled. Please call the bank for more details. Just, is this a scam message? So I called the bank. I don't use the number they give me. I go online and check, make sure it's the correct number, then I call that. And they say, yeah, it's true. Then I was like, how? Why? The person who answered the phone said they have no idea. Then so I asked them, what do I do with the money now? They give me a very cold reply. Up to you. So I thought it was very strange. Then a few weeks later, the news of COVID broke out. Then I knew why. Because the banks, they were not doing so well due to the pandemic at another country, which is slowly spreading across the world. And even their staff were eventually being retrenched. So they have no money to pay me for my structured deposit anymore. That's why they canceled it. Yeah, so maybe the staff, I don't know whether they really know or they don't know, but they were not able to release the information to me until the official news was broadcasted. Yeah, so there is a risk if you park your money with the bank. Then stocks and shares, is very risky. It depends on even geopolitics, commodities as well, and also real estate. You have to time the market. So real estate, for example, during COVID, resale property was doing very well. Why? Because of the lockdowns, a lot of our contractors and builders, they are from our neighboring countries. They were not able to come into Singapore to continue building. So all the BTOs, all the new flats, new condos, taking a long time to be built. That's why people who urgently need an apartment, they look at the resale market, uh, and which resale market is already built. What? You just have to renovate it. Yeah, so the resale market was doing slightly better during the pandemic. Yeah, so real estate you have to know again how to read, keep up with the geopolitics news, the economic trends, to better help you with the timing of buying and selling. Okay, as students, let me just give you a quick test if you want to start doing investment, but no property, stocks, all that need a minimum age to buy. So what can students do? Okay, out of all these items you see on the screen, which one do you think can you invest that will potentially appreciate in value over time? So appreciate in value just means grow in value lah. They use this fancy term called appreciate in value. So is it A, cars, B, timepieces, C, property, or D? What do you think can likely appreciate in value? Okay, so A, cars or vehicles in general, right? If you know a bit of engineering or physics, you will know that the mechanisms, the more you use, the faster they spoil, the less useful they will be over time. Yeah, so usually vehicles will depreciate in value because you have run a lot of miles, your tires, all that, even though they can be changed, but the mechanism, the structure of it will still wear out very fast. So not all cars can appreciate. Certain types of limited edition sports cars maybe, and antique cars. Luxury cars usually no. Yeah, so antique cars is because a lot of people who have a penchant for collecting old cars, right? They don't care whether the mechanism run out. They just love the structure, the model of it. Even if it move very slow, sometimes you see like all the tauges on the street. Yeah, the car move very slow. Then the window got no windshield. It's all transparent because it's so old, right? Uh, and they have a chauffeur driving in front. They don't mind. They still love it. Yeah. So for certain type of collectors, they will still buy the cars. Then for B, timepieces, again, it depends on brand. So luxury watches, you might know of a few branded ones, the very famous ones. Time pocket watches might appreciate in value. Again, there are people who collect them. So if there's a large pool of collectors, likely the value will appreciate. You have to do your research. If you want to start buying and investing in one now or saving up to buy one now, which brand, which type should you buy? So again, passive income is not so passive. You have to do your own research. Then for property, again, it's the timing that matters. Doesn't mean you always appreciate in value. Houses like cars, right? The longer and older it is, the more maintenance it is needed. Yeah, so, but then if like during pandemic, new houses are not being built, then suddenly the old houses will start to appreciate in value. Yeah, so property depends on timing. The last one, uh, collectible items, labubu, all that. Again, it depends on how big the pool of collectors there is. So in the early 2000s or late 1990s, right, McDonald released a lot of Hello Kitty collectibles. Wow, there were super long queues to go and buy all this. Now I don't even hear about them anymore. So are there people who are still big fans of those items? Maybe, but the pool is not very big. So if the pool is not very big, it will be hard for you to sell these things off in the long run. Yeah, for Lovable, very hard to predict. Now, the trend seems to be dying down quite fast. But Pokemon cards, surprisingly, in the last 20 and 30 years, they have been very popular. Recently, you might even hear of middle-aged men get assaulted by youths for over Pokemon cards. Then sneakers, uh, if you are sneakerhead, that's what they call the sneaker fans, right? You will know that even if you is limited edition sneakers, nowadays the materials used are like sustainable, recyclable, so they don't last very long, especially if you don't wear them. If your house has very pristine condition, or you buy a special cabinet like those that keep camera equipment, uh, you if you don't wear the shoe after 1 year, you take out from your cabinet, right? It looks brand new, but once you start wearing it, the sole will keep falling off very fast. Yeah, so you if you want to collect this kind of item, make sure you also have the environment to maintain them so that you can sell it off as they are in the long run. Shoes and luxury bags are quite hard to maintain. You have to really put in a lot of effort. That's why, again, passive income, not so passive after all. Okay, so how do you know what things you can start investing? When you do your research, always look for trusted sources. Things like official news channels, Straits Times, Business Times. Then recently there are some articles, news articles that can tell you are these things worth collecting. If you need apps to help you break down certain formulas or understand the lingos behind them, you can tap on again official channels. This is provided by Money Hour. CPF also has their own resources. So these are, if you want, you can screenshot the QR code on the screen and save it for to help you have a better financial analysis. I don't really trust financial advisors because, again, they are providing a service, they are also profit driven, and they might have a lot of clients. So sometimes, if you don't do your own research, you just rely totally on the financial advisor, they might not be in time to tell you, oh, maybe the stock market is going to crash tomorrow, but they have so many people to inform. If you don't really pay attention yourself, then you might lose money before receiving the information. Okay, for students, if you want to earn a little bit of pocket money but you don't have time to work part-time job, you can do surveys. There are platforms where they will pay applicants for the surveys submitted. So you can scan this QR code. This website, I have used it myself. I think that it is reliable. And after you accumulate points from completing the surveys, you can exchange for different kind of rewards. But please do not anyhow do the survey. This is a very serious platform. They will make sure that your answers are not inconsistent with each other. Like in this survey, you say that you are 12 years old. Next survey, you say that you are 14 years old within the same week. So they will actually flag it out and even block your account if you anyhow do the surveys. Some days there can be a lot, some days there are not many. So please do not spend too much time on this. Only if you have free time, maybe during your school holidays or long weekends, then you log in to have a look. Don't let it affect your studies. Okay, so just a recap of the things that you have learned. You have know that credit cards are something that you need to find the right one based on your life circumstances. Budgeting is to help you keep track so that you don't pay extra mindlessly without knowing about it. Insurance, it will cover your expenses. Savings account is a bit of both. Then in the intermediate module, which I will come up with a few months later, I will go more in depth on investments and also insurance. And for now, if you want to learn a little bit more, you can look at official channels like Wired. They will invite professionals to explain certain things. So this video, I found that this lady, she is an ex-financial advisor. She has her own YouTube channel. And what she shared in this Wired video is quite easy to understand and very neutral, nothing too biased towards certain views. Yeah, so when you want to look at financial literacy tips, try not to watch influencer channels because they could be sponsored to say certain things. Yeah, if you really want to watch, right, make sure you watch both official reliable channels and a little bit. Then you go and hear whether are they sharing the same thing or not. If someone is sharing one thing, someone else saying something else, then you have to do more research on it. Okay, so why did we have this activity at the start? There are no fixed answers on what is most required, But there are unnecessary things like the thermal wear, because it's a tropical island, no matter day or night, it's going to be hot. And cooking pot, you don't really need it, which is a luxury, not a necessity. So same with financial literacy, you have to filter out things that are necessity, that are luxury, good to have, and whatnot, before you can manage your finances well. And okay, this one I will skip. Yeah, so hopefully you have learned something from this video.